Hello, and welcome to myfinancesteacher.org. Let's have a quick look in this video at the general stock market. We'll have a quick look at coffee, US dollar, and precious metals. Let's start with S&P 500. And despite this quite a sizable green candle on S&P 500, unfortunately today is quite frustrating for me. The reason for that is because I was actually stopped out of my position from SPY and triple Q. I need to double check that. I think both have been stopped out. And the reason for that is because markets opened much lower just because of this silly news on the Trump family getting positive on all of that health issues and the virus that everybody is now talking about. For that reason, markets opened down, but we do see still a relatively sizable green candle today, and looks like the markets are still in a relatively strong uptrend. The previous short-term cycle did finish with an 87 days in its duration. As before, I still expect that this bounce is probably going to last for maybe around a couple of weeks. It might easily test the upper range of these Bollinger Bands before turning around and maybe going back down into the end of the intermediate cycle, possibly sometime near the election, because a lot of uncertainty with the elections might actually create that decline in the general stock market. But I really wanted to take advantage of this short-term bounce, although of course it is a relatively risky trade because the bounce was expected to be relatively short-lived. And as you see, although the trend continues upward, just as we have been discussing in our posts and videos, I just keep getting stopped out. Now, do I want to re-enter into the markets given the uptrend is still in place? And the answer is yes, I kind of do. As I mentioned, it was frustrating to get stopped out with this nice green candle on the day. So I kind of really want to jump back in and ride this rally up into the poke through the upper Bollinger Bands. But I think with a bit of a frustration right now, I'd better cool down over the weekend and make sure that it's not my emotions that are making me take the trades. Remember, we want to trade with our cool head rather than based on any emotions. So I'm gonna wait and very likely miss this rally early next week up to 3460 on S&P 500. That would be unfortunate, but I still think that there is a good chance for a sizable decline into the election time. So that's one potential buying opportunity that I will try to take advantage of over the next few weeks. And another potential short-term buying opportunity is if dollar finally turns around and moves up over the next few days. That maybe might help the stock market to turn back down. And since I'm only sharing my opinion with you guys, I also welcome your opinion. So let me know what you think about the general stock market in the comments. Next, moving on to coffee, another nice green candle on coffee at the moment, but I still think there is a good chance for coffee to decline, maybe just over the next 1 or 2 weeks, possibly into the end of its regular cycle. Usually these cycles last for about 145 days, at least that's what has been the average over the last few years. Currently coffee is on day 108, and because these cycles can also be shorter than average, anytime over the next couple of weeks, we might see a poke through the lower range of the Bollinger Bands, which might give us the end of the cycle. And looking at the 4-hour chart on coffee, over the last week or couple of weeks, we still see lower highs and lower lows. So even though we do see a nice green candle today, it's possibly a little bit too early to say if a significant bounce is on its way. Next, let's have a look at that US dollar. By now, the short-term daily cycle in the US dollar is already 31 days old. Usually these last for about 59 days on average, so we still have possibly a couple of weeks of upward momentum in US dollar before it probably has to cool down again. And this upward push in US dollar maybe starting today, we'll have to see. In either case, this upward push in US dollar might finally help me to catch this bottom in gold, maybe over the next 1 or 2 weeks. As I mentioned in a recent comment to Township Hank, there is a chance that the short-term daily cycle and possibly even the intermediate cycle on gold did finish over here on the 24th of September with a short-term daily cycle lasting for 43 days. That would be close enough to an average of 1.5 to 2 months. I would give that scenario something like a 40% chance, so that's a pretty decent, pretty good possibility there. But I still think there is like a 40% chance that gold will continue down over the next 1 or 2 weeks, meaning that we're still in an ongoing short-term daily cycle that so far has been going on for 51 days. So I am still waiting, but of course I can be proved wrong if gold breaks through some significant resistance zones above, say if it's breaking above the 50-day moving average. I might have to admit that the cycle did finish at the end of September, and I would have to probably buy a little bit late into the gold's short-term cycle. It would still be pretty early in the intermediate term cycle. And lastly, looking at GDX, well, over the last couple of months, we still see the trend is still down. The trend is your friend until it's broken. We still see a pattern of lower highs and lower lows on GDX. And today we see the start of another red candle. So I'm pretty happy with waiting on precious metals at the moment. So that's all from me, but what is your opinion? Let me know in the comments. Have a nice day, have a nice upcoming weekend, and good luck in your trades.